You're listening to AI PRISM from Seoul Economic Daily.
It's Tuesday, May 12. I'd like to share some thoughts about CEOs. Imagine waking up tomorrow and finding out your biggest hardware supplier has just halted production.
Right, an absolute nightmare scenario.
Exactly. And then, your AI tech stack is basically paralyzed by software constraints and government credit just dries up overnight. For you, running operations in Asia, that's not some distant worst-case scenario. It's the reality of the next 2 quarters.
It really is.
So today we're unpacking a stack of reporting from the Seoul Economic Daily. We're looking at 3 huge shifts: supply chain labor disruptions, AI infrastructure lock-in, and, some severe macro volatility. So let's start with Samsung Electronics and this looming May 21 strike risk.
Yeah, this is a massive shift. For decades, they've relied on this HR philosophy called Tohana wi Gajok, which means another family.
Right. It's essentially corporate paternalism. Samsung acts as the strict but generous parent, covering housing and healthcare as long as nobody unionizes. So this strike, it feels like the kids are finally moving out.
That's a great way to put it. It completely rewrites the benchmark for Korean conglomerates.
Yeah.
The union is demanding a profit-sharing structure of 15% of operating profit.
Wow, 15%.
Yeah. And management is countering with 10% for the Device Solutions division, plus a 6.2% base wage hike, and a housing loan of up to 500 million won, which is about $350,000.
Okay, still a big package.
Right. But JP Morgan estimates a strike could hit Samsung's 2026 operating profit by roughly 40 trillion won, so around $28 billion.
Wait, 28 billion? That's incredible. And I know the American Chamber of Commerce, AMCHAM, is warning that this operational risk is quickly becoming a strategic execution risk. But are global clients like, Apple and HP actually going to shift to China's CXMT or Taiwan's TSMC just over a Korean labor dispute?
Well, it sounds extreme, but it's really not a bluff. When these major clients shift from just contingency planning to actively exploring supplier diversification, they're basically abandoning the baseline assumption that Korea is this strike-free hardware haven.
So even if the strike doesn't happen, the illusion of perfect stability is broken.
Exactly. The seal is broken.
Right. And that hardware vulnerability really explains why companies are scrambling to control their own AI software. If you can't guarantee your hardware, you definitely can't afford software lock-in.
No, you absolutely cannot.
Look at Alphabet closing the market cap gap with Nvidia. They're at $4.83 trillion compared to Nvidia's $5.23 trillion US dollars. And they're doing it through full stack integration, owning the models, the cloud, and their own TPU chips.
Right. But then you look here in Korea, and public agencies are completely ignoring their own government-backed domestic chip startups, like the Nvidia project.
Yeah, why did they just default to Nvidia over the domestic MPUs?
Well, it comes down to the tension between national industrial policy and just basic operational survival. The government poured money into domestic startups like Rebellions, which hit a valuation of 3 trillion won.
That's about 2.1 billion US dollars, right?
Exactly. But when an agency like Korea Southeast Power budgets for a new AI platform, they allocate roughly 1.227 billion won, or about 860,000 US dollars, specifically for Nvidia GPUs.
Just for Nvidia?
Yeah, and it's because of Nvidia's CDA ecosystem.
Of course. Because CDA isn't just a physical chip, it's the programming language everyone has spent a decade writing their AI models in. Switching to a domestic Nvidia chip means rewriting years of code from scratch.
Right, it's like trying to move your entire massive company from Windows to a brand new operating system overnight. Buyers are just terrified of stability issues.
So they pay the premium for guaranteed compatibility. Okay, so you're squeezed between fragile hardware and rigid software lock-in. But zooming out, the macro environment is shrinking your margins even further. Externally, we have President Trump threatening 2 more weeks of strikes on Iran,
which injects massive volatility into logistics. And concurrently, you have the upcoming U.S. China summit tackling semiconductor export controls.
Right, and if those controls tighten, operations could easily get caught up in Korea's Foreign Exchange and Foreign Trade Act, which heavily regulates how strategic goods cross borders.
Exactly. And domestically, the policy safety net has a massive hole in it. The Ministry of Economy and Finance is expanding regional tax incentives to push corporate investment out of the capital.
But wait, at the exact same time, KAMCO, the state-run distressed asset manager, they just booked a huge loss, right?
Yes, a loss of roughly 1.4065 trillion won, which is almost 990 million US dollars on their pandemic-era New Start fund.
Oh, man. I mean, that is the ultimate canary in the coal mine for a CEO. If auditors are forcing a state agency to write off $1 billion, the hidden fiscal costs of government support are suddenly glaringly visible. Domestic credit is about to get much tighter and more expensive, especially with the Bank of Korea watching inflation so closely.
Precisely. Which leaves you with something entirely new to consider. As those regional tax incentives aggressively push factories outside the Seoul metropolitan area, combined with this newfound labor militancy at places like Samsung, are we about to see a completely new domestic labor map? We might be watching the birth of highly unionized provincial tech hubs across Korea.
That's today's AI PRISM CEOs. This episode was produced with AI assistance based on Seoul Economic Daily reporting and reviewed by a human editor. AI PRISM is a Juan Ifra award-winning series. We'll be back tomorrow.
You've been listening to AI PRISM from Seoul Economic Daily.